Every single day, lakhs of investors buy a stock in, what, a matter of seconds, just one tap on their phone. But behind that one quick click, somebody actually spent weeks, maybe even months, studying the market. Who is that person? And how exactly do they figure out if that stock is genuinely worth your money?
Well, welcome to this explainer on the NSIM Series XV certification. If you're an aspirant looking to master Chapter 1, you are in exactly the right place. We are going to be breaking down the introduction to the research analyst profession. We're going to set up the absolute foundation you need to ace this material.
Let's take a quick look at our macro to micro roadmap for today. We'll start with the role of a research analyst, then move through our three big pillars: the economy, the industry, and the company. After that, we'll cover communication and client relations, and finally, wrap up with the essential qualities you need to succeed. Okay, let's dive into this. Section 1, Role of a Research Analyst, the Foundation of Informed Decisions. So a research analyst, or RA, is essentially a financial translator. They're out there collecting, processing, and interpreting massive amounts of data to help clients make smart, informed investment decisions. Their primary job is evaluating the growth prospects of companies. But here's the thing, they definitely don't do this in a vacuum. They have to deeply understand how those individual companies fit into the broader economic environment. It's like putting together a giant puzzle. Which brings us to Section 2, Pillar 1, the economy, the macro environment. Starting at the widest possible lens, an analyst's scope has to be huge. I mean, before looking at a single stock, an RA monitors the big macroeconomic factors. We're talking national income, inflation, interest rates, and unemployment. For your exam, you really want to pay special attention to these key terms: fiscal policy, which is basically government spending and taxes, and monetary policy, which is controlled by the RBI. You also have to track global trade, plus the flow of money coming in through foreign direct investment, or FDI, and foreign portfolio investors, FPI. Why does this matter so much? Simply because no company operates in isolation. The overall economic weather affects absolutely every single sector out there.
Let's move to and see how this builds. Section 3, Pillar 2, the industry, sector-specific drivers.
Okay, so once you understand the global and national economy, you zoom in on the specific industry. Think about it. A pharmaceutical company has totally different growth drivers than, say, a banking firm or an IT services company. They're basically playing different games. So analysts must master the specific regulatory environment of that sector, dissect the prevailing business models, gauge the intensity of the competition, and of course, intimately understand consumer behavior.
Now we zoom all the way in. Section 4, Pillar 3, the company, the micro level.
And this brilliantly illustrates a crucial two-dimensional analysis. On one side, you have your qualitative factors. These are the intangibles, right? This means evaluating management capabilities, the company's work ethics, their brand power, and the overall strength of their business model. Honestly, evaluating management's work ethics is almost like professional detective work. Then, on the flip side, you have your quantitative factors, the hard numbers. This means digging deep into balance sheets, P&L statements, cash flows, production capacity, and market share. You absolutely cannot get a complete, accurate picture without looking at both. All right, let's move on to the practical application. Section 5, Communication and Client Relations, converting data to action.
So how exactly do you convert all of that deep data into real-world action? Well, there's a highly structured workflow for this. Step 1, conduct thorough pre-meeting research. You never ever engage without knowing the background first. Step 2, engage directly with company management to gain insight into their vision and strategy. But remember, the analyst absolutely must remain neutral and cross-verify those management claims. You can't just take their word for it. And step 3, produce research reports for your clients that are simple, clear, and concise. Critically, you must disclose any conflicts of interest and clearly state all your underlying assumptions. Total transparency is everything here. In your future career, this is exactly what's going to protect your reputation.
So, what specific traits are actually required to succeed and execute this complex workflow? Let's look at Section 6, Essential Qualities for Success, the DNA of an analyst. So the crucial point is that an analyst needs a highly specialized toolkit. You need a high degree of numerical proficiency to analyze factors and identify trends in the data. You have to be totally comfortable with numbers. You also need deep financial literacy and conceptual clarity to actually read, comprehend, and critique complex financial statements. And of course, in today's digital world, you must have analytical tool mastery. That means being highly proficient in tools like Excel to process all that modern market data.
But, it isn't just about the numbers. The qualitative skills are really what separate a good analyst from a great one. A successful RA has a super inquisitive, inquiring mind. They know exactly how to ask pertinent, penetrating questions. Because financial data is incredibly complex, they have to have a methodical attention to fine details. And of course, strong verbal and written communication is absolutely essential to effectively convey all your hard-earned findings to management and your clients. Which brings all of these elements together perfectly. As our source notes, the ability to understand diverse business models and the competitive dynamics within an industry is a vital quality for making sound investment conclusions. That right there is what we call true business acumen. It's taking the macroeconomy, the industry drivers, the micro company details, the hard numbers, and those intangibles, and fusing them all into one clear, accurate recommendation.
Which leaves me with a question for you. As you prepare for the NISM Series 15 exam, which of these analyst skills will be your strongest asset? Reflect on that as you review Chapter 1. Thank you so much for joining me in this explainer. Keep up the fantastic work in your studies, and I'll see you in the next one.